What's up, YouTube? Just wanted to do a quick video, a quick little update. We're going to talk about the futures in this video and kind of, well, we're going to talk about a warning sign, some writing on the wall, what's likely going to happen. We're going to finish off this week with Thursday and Friday left, and then next week we go into a holiday week. So Monday is July 4th. The markets are closed for that. So again, another short week after that. But if you were in the markets today, things seemed a little bit interesting, especially with the indexes. So we'll jump in here. We'll take a look. So if you're new here, hit the subscribe button. You guys know the drill. Hit the thumbs up. Let me know in the comments. I usually do a call to action at the end, but let me know in the comments down below. What did you trade today? Were you short? Did you sell options? Were you long? I was a mix of both. But I gotta say, I did close some long positions and got back in some short positions, which we'll get into. So first and foremost, we got the dollar. Dollar rocking up today. We were in a U.S. dollar Japanese yen trade long, which is okay. Nothing really to worry about there. Not too much of a signal from the dollar as far as like sometimes when the dollar goes up, the markets can go down, or when they see the dollar selling off, we'll see the markets push up. The long and short of that is, or I guess the short of that is, with the cheaper dollar, everyone else can afford to buy more of our stuff. So as it goes up, vice versa. The lesser of that, the opposite. So they can't. But not always in inverse. That's why we can't call them an inverse. As far as the Russell goes, Russell was about the only one with some movement. I did close my position. So when I bought the futures last day, I took the type 1. My stop was well below here, but we did kind of just hang out. So I ended up closing. I put my stop right below here, so that did tag out for a loss. I did not get back in. And honestly, this is what I'm worried about spilling over into the S&P and the NASDAQ. So the S&P was worse. The S&P was inside by like less than $4. If you look at SPY, like inside day, just bland. Like, where is this thing going? And as we're looking at tech kind of did the same thing. A little bit more volatile. Held up, I think, a little bit better. Well, there was a little bit more movement in tech. I can't really say anything else to that. But I talked about a sell-off. So we hit this zone and we sold off. Full stop. That's it. And the reason why, and we'll get to the expected moves here in a little bit because that's what I do on Sundays. So we're talking about just that. Actually, we can just pull up right now. Look right where we're at. Now, I draw these out for you guys on Sunday on this channel. So if you have the bell turned on, you get notified. You guys watch me draw these lines. And this is going to go for the S&P as well. This is a number I made up out of thin air, just out of my head, my experience. Like 80% of the time, we rein things back in. So we get outside the expected move, algos turn on, which is funny, and then rein it back in. Somebody reins it back in. It's the easiest way I can paint that picture. In fact, if it gets outside, algos turn on, start delta hedging, and it's a suction, just like vacuum to the next one. That's where volatility kicks up. I'm not talking about the VIX. I'm talking about things moving and grooving, the danger zone. So we held inside there. But pulling back into that mark had me thinking, I swung long positions overnight because I was thinking, we're probably going to get oversold bounce. I want to get back in short. Let's take advantage of that. We did not get that. Now, all we did was sell off. The momentum technically stopped. So if we just look at the daily, we sold off right there, indecisive candle. Now we're oversold, so likely we get the pop-up. And maybe that happens tomorrow. Probably more of the likely scenarios is that happens tomorrow. But I don't want to get negative. There's just a lot of bad things going on right now. We're not in the best spot. And I don't know if I'm going to do a video yet about it. But Michael Burry, as much as I make fun of him, I make fun of one thing kind of out of context because he's always talking about a crash non-stop. I've called out 2 crashes on YouTube. In 2019, I said in 2020 we're going to have a crash. I even said 50%. Nailed it. And then in 2021, I said we're going to crash 2022. Not as bad as the last one, but 30%. I'm 2 for 2. That's 100%. Michael Burry is like 97% wrong because he calls a crash every day. Now, you can't call a crash every day until it happens, say you knew it all along. You were just wrong every day until it finally happened. Makes you suck. Like, you're just absolutely terrible. It means we can never listen to you. But which shout out to ZipU, because I did watch one of his videos where he just broke down a bunch of Michael Burry's tweets. And man, I was actually surprised that I agree with actually most of them. You know, there's a lot of bad writing on the wall. And that to me had me thinking, and maybe I'm just a little bit too biased, but I was thinking, are the Bears just catching their breath, and are we going to spill over? Because if we look at the past couple weeks, we're outside the expected moves. We're unraveling. Like, we're coming undone. You know, it's not a good look. The market is anything but efficient right now. So that's why I closed my long positions and kept my short positions. And, well, we sold off yesterday. I closed those short positions, and then I was hoping for a spike up to get back in. Still had some, but I just added back on. And at this point, there's another video coming about this. I am hedging actually my investment account at this point. I don't want to. I would rather pay that insurance than ride this next storm out without it. But let's jump into the S&P real quick. Same story. We're kind of breaking down as I'm recording this, so it's red, but big deal. Nothing. Just flat out nothing. I thought we might sell up into this and base out. Then I even said last night, like, if we base out here, I would look for the continuation to the south side. But I was looking for that bounce, and I didn't think we were gonna make it to the zone. I was just thinking I want to see green candle. So even Jake in my chat asked me today. He said, "Where are you looking to get back in your short position?" And it wasn't a zone thing. It was actually more of I want to see buyers show up, and I want to see that momentum slow down. Because when I see that curve, I'm attacking it. I'm jumping in. We obviously never got that. We just went sideways. We popped up. I told everybody in chat, this is where I'm grabbing them. Got back in. And right now, those puts are up, even at the bell. So even now, they'd be further up. But I gotta say, so technically right now, we are still just inside this one green day we had. And man, there's a statistic. It's like something ridiculous, like 70 or 80% of the market's biggest days in like all of history have been in bear markets, just those quick little snapbacks, and that's kind of what that is. And then right now we're still inside, so we're kind of bullish above, bearish below. Typically, I would be drawing as long as we stayed inside. You know, I'm drawing two lines like this. We're setting alerts. We don't really need it because we have zone and zone, so obviously we'll play it like normal. But, you know, inside until that breaks. Right now, it just kind of looked like the bears were catching their breath, kind of giving off that vibe, and gearing up for the next move down. Which, again, S&P right here, right at the expected move. We bounced a little bit off of it. And an 80% chance I think they just keep it right in here and the fireworks are done. Or 20% chance we rip it to that 2 standard deviation. Might even rip it and then come right back. Either way, that 20% chance might seem small, but is going to seem so much bigger when it happens. So I wanted to make this video talking about this. That's the level we're watching out for. SPY just below this, not looking good. That's the 370, we'll call it 379 mark. Anything below that, not only is there a funnel cloud overhead, tornado sirens are going off. Hopefully your house doesn't get hit, but it just might. The settings are there. And if you're not in Tornado Alley, it's not a good thing. It means your house might blow away. You ever seen The Wizard of Oz? You're in Kansas one day, next day you're not. Except you don't have any magic red slippers. You're just wrecked. So we want to avoid that. The interesting thing about the S&P today was some things were up. So I want to say Microsoft was up. Yeah, Microsoft had a green day today. So a little bit of a green there. There was what? Apple was up. And this is, so that hit that zone. And we're going to get to this here in a second. So some tech names were actually, some big movers were actually up. Tesla, I'll just point this up, wasn't green, but expected move, reined it back in. It's going to be an interesting one. Someone asked me if that goes 700, are you looking to short? The answer is yes. Meta was, rocking today. I have leaps in Meta. They were actually up. But what was funny is when you look at XL, hang on, let's just go financials real quick. Financials are down. XLE getting rocked. We talked about a crash a while back on YouTube. Like, how can the S&P, I thought the NASDAQ had already sold off too much. They've already crashed a lot. We're good. There's a lot of things just decimated in the NASDAQ. So I thought, how can the S&P, this is before the S&P, it was, so remember when the Russell and the NASDAQ had officially crashed. They're right there. The S&P hadn't yet. We're almost there. We're trying to think, how does the S&P crash? And if so, do the other ones just get wrecked even more? So we talked about how energy could actually bring the S&P down while everything else hangs out and goes sideways. Well, you can see today some names were actually up, some with some actual weight were up. Energy's down. It's selling off. That looks like a bear flag coming down. So that might just be headed south. Energy's got a ways to go down. It's been on quite the run. Now, if that continues its pace and things like Apple also do as well, then that only spells trouble out for the S&P. The second they align and they all get in the same bus, the market is going to move. And if you are just lollygagging around, dicking around your positions, and you don't have a plan, you are going to catch one. You're just going to get blindsided. So someone today in my group said, man, what do I do now? And quite a bit of people in my group said, what was your plan? Like, we don't jack around in my group. Turns out, so nothing was actually wrong. His trade never hit. He wasn't planning on swinging. He kind of took the trade thinking one of these is going to tag out. I'm going to be up or down. We're going to call it a day. It stayed flat. He's like, well, I'm a little bit down. Do I take the L? Do I swing? Or nothing happened. But my point there is, if you're asking what do I do now after that trade's already been taken, that's a fool's game. You're going to jump in that 95% game real quick. You're going to be just like all the people on Reddit. Not the cool ones you hear about making millions, but the rest of the 99% of the crowd just losing all their money. You jumped in blindly, flying by the seat of your pants, shooting from the hip. You took a trade, and you're like, now what? This is not the market to be playing that game in. So, anyway, I'm going to wrap it up here. Let me know in the comments down below. What did you trade today? You long, you short, you sideways. You more of an iron condor person. You more of a, I'm slamming this thing to the dirt, or all-time highs are around the corner. I did see it on Facebook today. Inflation is a myth, and it's going to get debunked. So, well, hopefully your account doesn't look like his. Just to pull up the calendar real quick. So right before open, we do have jobless claims coming out tomorrow. PMI, meh. These things, this is what I was talking about earlier on the last video. MyFX book, click on your economic calendar, and it's a countdown. This is how everybody should be talking. Not, it's 2 p.m., we get it, you probably assume Eastern. But you know what time everyone understands? Hey, that's in 12 hours and 58 minutes. Whether in Hong Kong time, Central, Pacific, does not matter. 12 hours, 58 minutes, just know that we're firing off. Now, for the people that are just really kind of dense, green means low, means it's good. Probably not going to have any economic impact. Yellow, medium, keep an eye out. Red, things could move. Now, I like it because it is just a quick visual, especially for you Forex people. This is a site you need to know. Someone did ask in my free Discord chat, this is the site. So anytime you see one of these in the red, if you're in a Forex position and that is your country, manage that position before it happens. And the only reason I bring this up now is because we do have these tomorrow morning. Whether they mean anything or not, I feel like this market is just looking for an excuse. It's an emotional, unraveling market just waiting for just the drop of a pin to make an emotional decision. So I would have never actually cared about any of these. But they're coming out tomorrow, and that's where we got to keep an eye on things. If that's where we're going to see any kind of movement, any kind of trickery, algos will be trading these reports, scanning keywords, and all that. So anyway, I'll wrap it up here. Again, let me know down below what are you doing, and I will see you guys in the next video.